Hi, I'm Suman Dutta, a first year PGPM student from the batch of 24-26. As part of our Term 3 IEP course, I'm here to talk about the banks based out of India and their NPAs, how they are slowing down the Indian economic growth, right? Now let's delve into this topic in detail. So, what are non-performing assets in nature, right? So, if I have to define it, I will go about that loans that is overdue with its interest and its principal for more than 90 days. So there are three categories. One is substandard, doubtful, and loss assets, right? So what is substandard? So that is defaulted for less than 1 year. What is doubtful? That is more than 1 year. And what is loss assets? That cannot be recovered at all. So now there has been an NPA trend that has been improved from 11.2% to 3.2% from the past 2018 to 2024. So that's a quite significant improvement that India has seen so far. So now, what are the potential causes of NPAs in India, right? So first is excessive borrowing lead to defaults. There are corporate defaults, poor risk management, there are weak risk assessment in PSB, and there are also economic slowdown and sectoral crisis that caused delays and low return. So now excessive borrowing, that excessive credit was issued to certain sectors, and that leads to debt burdens beyond their capacity, repayment capacity, right? So, and there are sectoral crises like infrastructure, power, steel, and telecom faced these delays that delayed to market downturns and cost overruns, right? And some borrowers misused these funds that failed to manage operations efficiently, right? And there are external shocks like pandemic or global economic trends in that has led to these PSPs, or that has led to distress, especially in MSMEs, hospitality, and retail businesses, right? Now, so what are the impact of this NPS in the economy? First is banking crisis. There are high capital infusion and there are weaker investment, right? So in terms of banking capacity, that reduced bank lending capacity. So if there is more NPS, that is lower liquidity, banks hesitate to lend again, slowing down to economic activity. Higher interest rate on loans, so banks increases interest rate to compensate for losses, making credit costlier for business and consumer. So there are government financial partners. So frequent capital infusion into banks leads to higher fiscal pressure, affecting spending on infrastructure and welfare. So if and there is also declining investor confidence, right? So foreign and domestic investors become cautious about it impacting this banking stocks and market sentiment. And there is also weaker business growth and job losses, right? So business struggle to get loans, so lower expansion and lower employment generation. So what RBI and government measures can help to solve this problem? So there is this IBC code, right? Insolvency and Bankruptcy Code 2016 that has been established for a structured process for resolving NPS efficiently, right? So that leads to faster resolutions and time-bound recovery from defaulters. There is also NARCL, right? National Asset Reconstruction Company Limited. So that's a dedicated entity to purchase and resolve stressed loans, reducing the burden of banks. So now there is bank recapitalization and mergers to strengthen the weak banks through capital infusion and consolidating operations for efficiency. There is also digital and AI-based risk assessment. So if AI-driven monitoring to detect risky borrowers early, so then predictive analytics can help for a better credit scoring. So now there are a couple of challenges if I have to implement all this resolving mechanism, right? First is slow IBC process, second is defaulter resistance as usual, and there are high write-offs, right? So slow IBC means what? These cases take longer than target time, and this restructuring or defaulter resistance. So this restructuring loopholes, right? It allow defaulters to delay repayments, right? And instead of recovering loans, banks write off NPS, leading to recapitalization dependency. And there is also a shift from corporate lending to personal and MSME loans, increasing risk of future NPAs. So, what are the future outlooks that is ahead of our web and path? So, first is stronger AI implementation, right? So, there is a big data and AI for real-time risk assessment. That is to detect the fraud before the loan dispersals, right? Strengthening or first strengthening this IBC code, right, to reduce delay in solving bad loans. Diversification in lending, right, reducing over reliance on large corporates and expanding credit to MSME and startup. And also, this if we have to adjust interest rate based on borrower credibility rather than one size fits all lending, learning from global models like so. Our neighbors country has their AMC and United States has TRP model, right? That was implemented post 2008 crisis. We can consider these as case studies as well. So, what are the final takeaways? Takeaways is NPS declined, reforms helped, and critical governance, right? But challenges remain. So we have the reforms have helped but need better execution, right? So strengthening governance or risk-based lending and digital tracking is crucial for stable future. So now if I have to summarize and conclude this in one sentence, a strong banking system ensures there is a strong Indian economy. The challenge is not just reducing NPS, but ensuring they don't rise again. Thank you for having a patience watch.